Well, ready or not, tax season is here. Between all the changing rules and misleading headlines flying around online, there's a lot of confusion about taxes right now. But joining us to bust some of those common tax myths and explain what's really changed and what hasn't is financial professional Abby Reed, co-CEO of Reed Financial Group. Thanks so much for being here.
Thanks for having me.
We always love when we have you in here. You bring such a wealth of knowledge.
Thank you. Thank you for having me. I love being here.
It's that time of year. So let's talk about what changes people should be aware of as they start to do their taxes.
Yes, believe it or not, tax time is here. So let's start with some good news.
Okay.
The Tax Foundation has estimated the average refund is going to be $3,800.
Okay.
Which is great, which is up from $3,000 last year, which that's a huge increase.
Yeah.
And that just goes to show there were a lot of changes that really happened mid-year last year.
Okay.
And so the main three things that drive that bigger refund for most people are going to be the standard deduction. So that has increased again. That typically increases with inflation, which is good. So if you file single, your standard deduction is over $15,000 just without itemizing, just right off the top.
Shout out to the singles. All right.
So
Very
for
cool.
married, it's over $31,000. And that's just the standard deduction.
We'll take it,
exactly.
Yeah. Okay, awesome.
That's a huge benefit. You don't have to itemize. You don't have to keep track of, your charitable givings and all of that. You just get to take the standard deduction, which now 90% of people do because it's so large.
Yeah.
Another increase is not the tax rates, but the tax brackets. So the amount of income that you can earn in each of those tax rates has increased. And that increases with inflation so that you don't have what's called bracket creep. So those two things are fairly standard, but the standard deduction is much bigger than it has been in the past. So that's good.
That's great.
It was actually set to be cut in half in 2026, but because of the big bill that was passed last year in 2025, that has stayed. They kept that. And then there's been a lot of additional deductions. So on top of the standard deduction, there's some new deductions that are pretty widespread. So most people can, or a lot of people can take advantage of them. And then there was also an extension and expansion of the child tax credit. Which is very beneficial to families.
Yeah, those kids got to start paying us back, and this is step one. Let's talk about some myths and misconceptions.
Yeah, there's a lot. Because there's so many changes, there's a lot of misconceptions, there's a lot of just blatant, myths and lies about
it's not true.
So there's some marketing spin on some of these. The biggest three myths that we've seen that we're trying to bust is no taxes on Social Security, no taxes on tips, and no taxes on overtime.
So this is what I heard. Talk to me about that.
That's kind of what it was marketed as. So with any tax deduction credit, with anything that's tax advantage, there's going to be some caveats. So let's talk about the senior tax deduction. So this one is one that we're getting a ton of questions about. We work with retirees mostly. So this is the one that was marketed as no tax on Social Security. It's actually a senior tax deduction if you're 65 or older by the end of 2025 and your AGI is adjusted gross income is below a certain threshold. You get a $6,000 deduction per person. It has nothing to do with Social Security. You don't even have to be taking Social Security. And it probably doesn't have anything to do with whether your Social Security is taxed or not.
Gotcha.
So that's one of them. That's a very different. It's still great. I mean, if you're married and you're over 65, you could get an extra $12,000 just taken right off of your income, which is nice. So taxes on tips, no taxes on tips. That's got some caveats as well. So you have to be in a certain industry. This is mainly going to affect the food industry. So think servers, bartenders, that sort of thing. Not so much musicians, DJs, those like the gig economy. That's not going to affect them quite as much, unfortunately. It's capped at $25,000, and your AGI, your adjusted gross income, has to be below a certain threshold. And then as far as the overtime, there's caps on that too. So it's $12,000 if you're a single filer. It's $25,000 if you are married filing jointly. So while there's some benefits in all of those three categories, it's not just a widespread.
You have to be careful. You have to be careful. So you have to look and make sure that you're dealing with a tax professional to know what you can get back there.
100%.
And then you'll be a great person to talk to when you do get that refund and figure out what smart things we can do with that money and how we can put it to work.
Yeah.
Okay. I like that. Thanks so much for being here. We'll have this information for you on ATLLiveshow.com.